Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive doji cross yesterday, bordering on an indecisive spinning top pattern after the previous session's second bullish white soldier. This was a pause in the very recent reactionary move back up from the gold long moving average below, currently at 107.28, and the April 2020 low at 107.25. We are still below the small March-based dark blue descending triangle pattern, made up in part from the overhead July 2017 to November 2018 head and shoulders neckline, currently at 107.43, along with the close by 50% Fibonacci line of the January 21 to September 22 move at 109.44. The break below the ascending triangle gave a primary target at 107.60, which was reached last week, and a secondary, harder to reach target X1 down at 106.95, which is still live. The primary target was also down at the first support below, which is the May 2020 low at 107.66, and the secondary target X1 is just under the support of the 50% Fibonacci line of the July 23 to February 25 move at 107.09. Meanwhile, we also had a March-based double top pattern with a primary target down at 107.53 and a secondary hard to reach target down at just about the same level as target X1. The primary target at 107.53 was reached last week. On top of all that, 2 weeks ago the market made a weekly key reversal down at the top of the recent market, which for most of last week had seen a follow-on lower before the reaction move later in the week back up. This nevertheless at the least temporarily lays at rest the idea of the market contemplating a possible annual key reversal pattern. However, I would still keep an eye overhead at the September 2014 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, I have a number of significant resistances ahead of that, starting with the 50% Fibonacci line at 109.44 and the shallow dark blue neckline. Please note, the 50% Fibonacci line had previously capped a reactionary rise back in November last year. Looking below, please keep your eye on the flatlining gold long moving average. So far today, a small move lower, but still within yesterday's range, and a reversion back up again at the moment, but we're still within yesterday's range. Cable, aka sterling against the US dollar. A key reversal down yesterday, but also a second consecutive indecisive spinning top. Looking overhead, we still have the secondary hardest reach target X1 up at 131 even for the breakout from the January to early March dark blue ascending wedge pattern. In the way, we have the November 2024 high at 130.47, whilst below we have the November 2020 low at 128.52, which acted as a support 3 weeks ago. And then the flatlining gold long moving average below that, currently at 128.07. I recently asked to continue keeping an eye overhead at the September 24 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. We have a number of significant resistances ahead of that, starting with the low of December 2020, plus the high of July 23, at 131.33 and 131.44 respectively. Now so far today, a try higher, then lower, now higher, but still within yesterday's range. US dollar against the Japanese yen. An indecisive spinning top yesterday, but the long tail on it was evidence of a follow-on low to the previous session's key reversal down. It seems the overhead resistances provided by the combination of the bright red upper time, currently at 151.21, of the July 24 to January 25 bearish Andrews pitchfork, as well as the declining gold long moving average, currently at 151.42, and the green short medium moving average, currently at 151.43, which, incidentally, those two are about to form a dead cross, as well as the August 1990 high at 151.58, plus the eroding effects of the 50% Fibonacci line of the whole of 2024 at 150.76. All these turned the market lower. Prices pushed below the 50% Fibonacci line of the July 23 to July 24 move at 149.61, as well as a lower trend line currently at 149.93 of the small March-based bull channel currently 149.93 to 151.85. I suppose the upper trend line of this small bull channel also helped in capping the rise. However, the market, despite the move lower, closed still back within the small bull channel and had as a low the 61.8% Fibonacci line at 148.68 of the January 23 to July 24 move. I'm wondering now if this is the end to the recent pause and countering higher to some of the large bearish patterns we've seen. Overall, the market remains within the larger big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork shows the bearish angle of attack of this market. At the same time all this was happening, we had another more immediate pattern to deal with, and that was the pink early February, late March descending wedge pattern. This pattern had been the very recent driver lower and helped an earlier rounded top pattern reach its primary target. Since the middle of March, we have seen a slow break and exploitation higher from this pattern towards a primary target X in the 153.59 area and a secondary harder to reach target X1 up in the 156.68 area. Both of these targets are outside the bright red Andrews pitchfork, and earlier raised questions by me as to whether or not to finesse the bright red bearish Andrews pitchfork into a shallower bearish shift pitchfork, which I would obviously do, but which would become passe if prices turned lower. The earlier key reversal down threatens both the primary and secondary topside targets. Now so far today, a further significant attempt lower, breaking once again below the very recent lower bull channel line, as well as the 50% Fibonacci line at 149.61, but not stabilizing below this last one as yet. Further down is the 61.8% Fibonacci line of the January 23 to July 24 move at 148.68. Below this we have a lesser Fibonacci line at 148.11, but then really nothing until the 61.8% Fibonacci line of the July 23, July 24 move at 146.69. This is also the low zone from earlier this month and a potential target zone for the break lower from the bull channel if it carries on. US dollar against the CNH, the offshore Chinese yuan. A bearish engulfing pattern yesterday with a long tail after the previous session's indecisive spinning top. Prices appear to be capped by the overhead declining green short medium moving average, currently at 726.95, with a little above it the rising mauve medium moving average, currently 728.01, plus further up the middle time, currently at 728.54, of the shallow bright red late December 24 to late January 25 bearish shift pitchfork. Meanwhile below we still had the combination of the now breached and possibly broken dark blue downtrend, currently at 725.33 of the January to March 25 descending wedge pattern, as well as the dubious support of the bright green extension to the upper trend line, currently at 725.67 of the January to March 24 ascending triangle pattern. We are seeing the market seemingly highlight the bright red bearish shift pitchfork as the main immediate pattern to watch. So far today, first a small dip, but then a seemingly strong move higher up through the green short medium moving average, and now testing the overhead mauve medium moving average and getting stuck there. But maybe we may have a move still, even up to the bright red middle time overhead that is a little above. US dollar against the Brazilian real. A strong reactionary combined key reversal down and bearish closing black Mariposa yesterday after the previous session's third bullish white soldier. Now, I did say yesterday that the three bullish white soldiers were possibly constructing a 3-day bearish advance block pattern. Well, yesterday's action was the resultant move down from that 3-day pattern. Prices closed distinctly below the slowly rising gold long moving average, currently at 574.54, the December 2021 high at 575.78, and well below the recently finessed and tested dark blue December 24 to date downtrend, currently at 575.35. Looking below, we have support at the lesser Fibonacci line, the 38.2 Fibonacci line at 565.07, which is the gateway to congestion from June to October last year, between roughly 565.07 all the way down to the flatlining purple neckline of the June to September last year head and shoulders continuation pattern, currently 540.64. There are not many defined support lines until you drop under 545. Meanwhile, looking above the dark blue downtrend, we have the October 2020 high at 580.70 and then the so far unreconstructed bright red uptrend, currently at 582.74, which I need to finesse lower at some point. Plus the green descending short medium moving average, currently 579.95. Finally, 2 weeks ago, the market achieved the primary target at 563.35 with a drop down from the large early October 24 to mid-January 25 rising expanding wedge pattern. The harder to reach secondary target X1 down in the 541.95 zone is still live, though I continue to wonder if I should maybe retire it as it is quite far. US dollar against the Mexican peso. A fourth bullish white soldier yesterday and a continuing rejection higher from the test down 2 and 3 weeks ago of the significant support of the previously highlighted congestion zone between 1987.96 and 1991.31. Prices significantly pushed over the overhead resistances provided by the bright red lower bull channel line, currently at 20.35.58, of the very gently rising early November 24 to early March 25 bull channel that had become a rectangle top pattern, along with the flatlining mauve medium moving average, currently at 20.36.67, and green short medium moving average, currently 20.38.14. The market ended up closing over all of these. This all puts at risk the secondary harder to reach target X1 down at 19.48.90 for the break below the rectangle top pattern. Looking above, we have overhead congestion centered around the September 2022 high at 20.57.65, and then the interesting 50% Fibonacci line of the April 20 to April 24 move at 20.99.90. Now so far today, a slightly higher open with a small move further upwards, and the market seemingly fearless in trying higher.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.